So in yesterday's video, by the way, gang, we talked about V-score. For those of you that may not have caught that video, you can see it on the Simpler Trading YouTube channel. We did a discussion about V-score, which is the standard deviation of the volume weighted average price, and how I used that to look at exhaustion, call it fatigue, extreme highs and lows, with the preference of looking for the long side of the trade, and most especially in the S&P and the Dow, and not so much on the Nas, and sort of neutral on the Russell, mostly because the daily time frames and their anchored volume weighted average prices are telling me that I'm better off being a bull in the Dow, and I'm better off being a bull in the YM as a day trader. So the bell rings, and I have to say this is a really tough V-score low. But if you'll notice, right here, 931, 932, I guess it is, right off the bat, that's tough. But right off the bat, V-score low hit and triggered the first and really the best buy of the morning. So sometimes, yeah, gang, that V-score can be quick. And that was just some sharp shooting right there by the V-score. Well, what about the Dow? Again, on the daily time frame, we're trading above both the first of the month anchor and the 10-day rolling, which definitely gets me looking for the long side of the market. Just that simple. And we look for the V-score lows. Now, did the YM give me a V-score low? It never touched the extreme. Never got there. And so we breached higher, which is fine, but not a whole lot of help in terms of anything that I could have done at the V-score. Really, the only thing that we might have been able to do would be looking at once it breached the momentum that you see through the breach. And that's not a trade that I like to put on. I'd rather the market come down to some exhaustion level or retreat after the breach to give me the buy. All right, to give me a buy. And we didn't get that on the YM. Which, sometimes you just have to accept that there's 5 pitches. That's what I look for. There's just 5 setups that I look for. That's it. 5 setups. And they're typically readings on the indicators that I use. And when they line up a certain way, I can check the box, say, okay, this happened, this happened, this happened. Got it. It's a buy or it's a short, whatever it may be. And so if I don't get it, I'm not going to force the trade. I can look elsewhere, and perhaps you look at the Nas. I'm not super bullish the Nas, but let's go see what the V-score looked like this morning. So when I look at, again, I want to take a look at the open. Did I get a V-score low? I didn't. Nothing I can do about that. And I'm not crazy about trading the Nas to the long side as a day trader anyways, because again, where it sits on the RTY. Now, I'm not going to beat myself up over one day that it's up, because generally speaking, at the moment, it's been better to be out or short. And that's been something communicated clearly by those anchored volume weighted average prices on the daily time frame. All right. Russell didn't do much for me either. They all breached, right? One of the pitches that the Russell gave us was the wave entry pitch. And you can see that right in here. So quite frankly, I didn't have a whole heck of a lot to do today. Long side of the market. And we took advantage of, what we could have taken advantage of was the V-score low on the Dow and the wave on the Russell, which really does emphasize a point about my day trading. It's quantity, gang. It's not quantity, it's quality. For a lot of day traders, it's quantity. For a lot of day traders, day trading is synonymous with frequent active trading. To me, all day trading means is quite literally, I'm going to be out by the end of the day. That's it. Day trading is not a strategy. Day trading is not a certain number of trades. Day trading simply is, I want to be flat by the end of the session. My day trading is very selective. I'm looking for one of 5 setups at a time. There's certain times of the morning that I'm looking for a specific setup. And if I see it, then I'm able to get in. And today, of the 4 indices, I had 2 setups. That's it. The S&P was quick but amazing, and the second one was the breach to the wave setup, which was all right. That was it. It wasn't too bad. But when you can make your trading entries process driven and pretty compact. In other words, you're not looking for 19 different setups and 4 different patterns and 9 different readings on 12 different indicators, whatever it may be. If you can keep them very specific to really in the morning up until about 10:30, I'm looking for 4 different setups. Actually, between 9:30 and 10, I'm looking for 2 setups. Between 9:30 and 10:30, that expands to 4 different pitches, 4 different setups. And then after 10:30, I add 1 more. I'm looking for 5 pitches. I can learn to recognize 5 pitches that the market throws my way that's worth swinging my bat at. And that's really what I want to be able to focus on. A very finite number of objective levels where certain criteria have to be met. When that criteria is met, it's much more binary as to whether or not I want the trade. All right, so that was the way that this Friday's trading session on the heels of non-farm payroll looked. And this is not a typical day. Non-farm payroll can be a really tricky day. And let me leave you guys with this. The non-farm payroll number, a lot of folks ask me about the non-farm payroll number in Charts and Coffee, which is the morning show that I do every day between 9 and 9:20. If you haven't checked it out yet, it's free. It's at the Simpler Trading YouTube channel. And they asked about the non-farm, and I said it's actually pretty bullish because we are in an environment where the market's concerned that the Federal Reserve might have to start walking back their asset purchases, which is called the taper, the dreaded taper. And that would be a shift in monetary policy that the equity markets won't like. Well, what keeps the Federal Reserve from doing that? Bad data or data that's amiss. So bad data is good. We're in that environment where we've gone down the rabbit hole where amiss in economic data regarding jobs, inflation, growth, these are good things for the stock market. This is where bad is good, because as long as the data is basically weak, the belief is the Federal Reserve is going to have to hold off on taper. It's going to have to hold off on preparing the markets for fewer asset purchases, less money printing, and then eventually higher rates. So, if you want to look for a reason why the markets are generally up today, I'm missing non-farm payroll, gang. It can be really that simple. That could be the sigh of relief. Whew, the economy or the market is not that strong, meaning in this case, the job market, and therefore, we can rally markets because the Federal Reserve has to stay on their current monetary policy trajectory. Sometimes it's just that simple. Trade what you see, know the psychology, and it's going to continue to be a very, very interesting May.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me